Hello and welcome to the latest Insider interview. Our guest today is Ben Rogoff, who is the manager of the Polar Capital Technology Trust. Ben, it's great to have you in the studio.
Thanks for having me.
We last had you in about 2 years ago. So how has the portfolio performed since then?
Well, it's always nice to be able to report on a very strong period of performance, and it has been. The technology market's been strong, and the trust has been stronger still. So I think over those 2 years, I think trust NAV is up around 78%, and our index I think is more like 66%. But the remarkable returns really over any given 2-year time frame, reflecting really a strong backdrop for technology, but specifically for AI.
And what have we seen over these 2 years in terms of the technology space? What are the key changes?
It's a good question, and I think what I probably should have said earlier on the return part of the question was we're really delighted with the returns we've delivered, not just because we've got the AI theme correct within the portfolios, but actually it's been a really difficult market for many growth investors. It's been a very narrow market. Obviously, in our world, Mag 7 has dominated. I think small caps have meaningfully underperformed, sort of only up 20% over that time frame in the US. So, not been an easy market. So to your point, what's gone right? What's changed? And the answer really is that AI has really continued to make very significant progress, and it's done that on a number of different vectors. The most important one of all is that models have got better. And so we've seen, again, if you go back to November 22, so outside of the 2-year window, but really what started this was obviously ChatGPT at that point. You had this incredible quarter from Nvidia in May 2023, where the company just blew away numbers, but really the guidance they gave was record guidance. No one had ever seen an upside surprise like that, and that really marked a different market. And that's sort of mostly captured in those two-year things. So what happened? Yeah, the models got better. ChatGPT became GPT-4. We've had a competition from lots of other companies at the frontier of AI. We've seen CapEx numbers. The ultimate barometer really on how is AI doing and how do people feel that these hyperscalers, how do they feel about the progress that AI is likely to make beyond what we see today? And the answer is it's in the spending numbers. And this year the industry is supposed to spend more than $370 billion on AI infrastructure, and those numbers are wildly different to where they would have stood 2 years ago. So we've got AI progress, more users. We're up to 800 million weekly users at OpenAI. Like all the vectors that would chart the progress of AI have been steeply up to the right, which has really created a backdrop which has been fabulous for AI-related assets, but actually pretty tricky if you're not on the right side of that trade.
And how has your portfolio been moved over the last couple of years? What have you been buying and selling?
When we first saw ChatGPT, we were pretty excited by it. I think there was quite a lot of skepticism in the market, and not just in the market, but in the wider world, where in the end AI just makes stuff up. It's probabilistic, and some people described it as a Victorian parlor trick, and we felt very differently about it. And again, just for background, we launched our own dedicated AI fund nearly 8 years ago. It was called an automation and AI fund when we first launched it, but I suppose you could argue we've had a head start. We've been looking at AI for a very long time. We were super excited about the transformer models that really are the underpinnings of ChatGPT, but Gemini and all of the leading models that you see today are built on transformers. And we felt that the trajectory of AI was going to be profoundly changed. We did some small stuff between the launch of ChatGPT and that Nvidia quarter that I referenced, but really after that, we pivoted very hard. And the trust I've been running for a long time now. We've sort of built it over time as being a very diversified 6 to 8 core themes, and trying to deliver more growth in the index. And actually, that changed after that Nvidia quarter. We feel that AI is a next general purpose technology. We've felt that now for quite a while. The market's coming around to our view. General purpose technologies change the world. Again, we may talk about that more as we go on, but how can you have a portfolio that doesn't want to capture moments like this? These are highly unusual moments of discontinuous technology change, and so we have meaningfully shifted the portfolio, really doing lots of work on the new AI infrastructure stack. One of the things I should probably mention is that we've just come off the back of a wonderful period for cloud. Cloud was about the commoditization, the homogenization of compute. No one cares what the server is, the PC that you use, because in the end, it's all about the cloud delivery. That's not the world that we're in today, where hyperscalers and others are building performant compute that require the fastest chips, the densest clusters, the lowest latency. We're building a very different compute infrastructure stack than almost anyone has seen in the market today. And so we've pivoted very hard towards that. We could talk about some individual names if you're interested. On the other side of the equation, we've been meaningfully reducing exposure to the old tech. And for us, old tech really looks like software. which have been the most incredible conduits for supernormal profits for a very extended period of time. Most people, myself included, have been brought up on the primacy of software businesses. Those businesses feel at risk, and again, we can talk about that if you're interested. We've been reducing software. We've been reducing anything really that doesn't have AI exposure in order to give us a really good chance of capturing the upside of this new cycle.
Let's go into companies then. So where are you putting money to work in these AI winners that you've mentioned, and which companies are you taking capital out of as you don't think they can survive in this new world?
So the portfolio is being relatively actively managed. I mean, this is, we're moving the portfolio almost every day because the pace of change within AI is really is frenetic. If you think the core of the AI story really has been about Nvidia. And Nvidia producing GPUs that can be used really to drive this new form of compute. And if you think, Nvidia is trying to release chips on an annual cadence. And around that, companies are trying to configure compute clusters around those new chips. On top of that, you've got hyperscalers that are, the Googles and Metas and others that are trying to configure their own form of AI cluster. The point we're really trying to sort of capture is that this is very fluid. Companies that you think are involved in the latest iteration or the frontier of AI may not be in the next one. And that requires a lot of work, candidly. So we're a team of 11. We do 1,000 company meetings a year. We're working harder than we've ever worked because we feel that the opportunity set is as good as it's ever looked. So what are we doing? I mean, in the portfolio to capture the AI story, it really does depend upon where we think we are. So for example, right now we've still got a very large position in Nvidia, but we augment that with companies in the chip world, in the memory world, semiconductor equipment makers, but also networking, which is an area that most people have not looked at for a very long time. If you recall, networking companies were very much the way to capture the dot-com period because we were carrying internet traffic that didn't exist before. And that became a very difficult thing to do, obviously post-dot-com bust. But today, architecture of AI requires these incredibly dense clusters, compute clusters, and that requires incredibly fast networking, both within the data center and outside of it when you connect data centers in order to train AI models particularly, but also to carry some of these incredible traffic that we're seeing already in AI, in inference volume. So networking is very much back in vogue. We have also, and I think this is quite different to both the index and to our peer group, we've embraced companies that are in the power and cooling world. Power is a critical bottleneck today. And if you extrapolate out, the needs for power in an AI-centric world are going to be very difficult to be met. An industry that has been sort of, I suppose, power consumption has been growing at 0.5% per annum. And there are estimates out there that say we might need to be 10x that in an AI-centric world. So we've been moving the portfolio to try and capture where these bottlenecks and where these supernormal profit windows exist. And as I say, on the other side of the equation, we've been beginning to, I suppose you could argue, disinvest from some of the Mag 7 names. Not all of them. There are some incredible assets there. They're a remarkable bunch of companies. But Apple, Google feel less good conduits to us, for AI, I should say. We've also meaningfully reduced our software exposure, as I mentioned earlier.
Nvidia is your largest position at about 11% of the portfolio, I believe, and it's gone up 300% over the past 2 years. So why do you still like it after such phenomenal growth?
No, it's definitely not outrageously expensive. And, again, I think my whole career really has been, I suppose, dogged. It's probably the wrong term, but for most of my career, the US tech sector has not looked cheap, and I think there are a lot of people that wish they'd been involved in what has been one of the best parts of the market for an extended period of time, because optically, some of the best technology companies on earth not look cheap. Google came public on 35 times earnings, and just how good has that company been as a conduit for return. So Nvidia is not too expensive to own. It is the company at the epicenter of AI. It is the GPU supplier, but increasingly the connectivity supplier, and trying to create basically AI in a box, and defining the industry. And again, we have to have exposure to companies that are defining, 3 years in, defining a new industry, and it is profoundly different industry to the one that the cloud industry or the cloud compute world that we're leaving. So we still have it in the portfolio. We don't see it as expensive even, but you might argue that at this scale, it's very difficult for the company to keep beating estimates in a very large way. I think that's a fair pushback. And I think that, it's a very large part of our benchmark. It's around actually 12% of the portfolio now, which is towards the higher end of really where I want any individual position to get to. Really from a risk perspective, again, investment is full of unknown unknowns, and you can't know where there might be a challenge to that business. But no, fundamentally, we continue to really like the business. And going back to that idea of it being too large to keep upside surprising, well, people were saying that 2 years ago. So having said that, if you think about it as the kind of core, the largest individual name that we own in AI, we actually have more exposure to AI outside of Nvidia than we do in that individual name.
On this AI theme, where are the hidden winners and losers that other investors might not be paying attention to?
So obviously I'm going to be careful about how I answer this because, again, I think the team is doing an incredible amount of work, and I think that some of the names that are hidden, we're happy to share, and there are others that with I suppose Colonel Sanders or Coca-Cola, I don't want to share all of the recipe with you, or your viewers today, and hopefully you understand why. But I think, look, as it relates to the the infrastructure side of this story, where most of our exposure is today, we have exposure to companies that are probably well known, but perhaps are less well held as AI conduits. So obviously there's Nvidia, but Nvidia is competing with Broadcom. Again, that's a fairly well-known mega cap, building ASICs, so custom chips designed to do some of what GPUs do for the very largest AI companies on earth. AMD is another name that we've owned for a very long time. We like its positioning as a sort of number 2/3 alternative. Google's and Meta's are going to want to have second sources to Nvidia, obviously. So there's compute, there's memory. You need high bandwidth memory in order to build these new clusters. So we have exposure to some memory stories, SK Hynix, Micron. Let's talk about networking. So there's companies like Credo, Astera Labs that are involved in helping those hyperscalers create these more custom configurations. So those names are probably less well known to some of your viewers. We also like companies that are involved in providing the optical componentry that helps you to link power data centers, because power is scarce, and if I need to access a certain amount of power to train an AI model, I may have to link smaller data centers together, and that will help companies like Corning, the fiber optics business, and also companies like Ciena that have been optical networking for the last 25 years. So there's a flavour, at least, of some of the names that are perhaps less well trod in the AI world.
And just how important could AI be for the future of the world? What could it look like in 10, 20, 30 years' time? And what opportunities are there because of this?
It's huge. It's a general purpose technology. Steel, electricity, the internet, they change everything. That's not true, of course, that's sort of hyperbole, and nothing changes everything. But that we believe, and we've believed for quite a while, that AI is likely to prove the next GPT. If you think about what steel did, it starts off just as a better way to make rails for railways. But very quickly you start building, buildings differently. Cities are, created, and tin cans, razor blades, and lots of other things. There are cars and home appliances made possible by cheap steel. So, the world has profoundly changed by GPTs. Specific to AI, well, look, we're already seeing some very significant changes. We're seeing the disruption actually start to show up in stock markets a bit, and you can see it with, Meta talking about being able to create advertising campaigns for their customers, and look at the damage that that's done to ad agencies. Look at some of the weakness in information services companies as AI capability is reaching a level where actually the proprietary data sets that you have may not be quite as valuable as we thought they were, because now these models are able to interpolate and start to potentially substitute for these proprietary data sets. So we are beginning to see it. Software, I think, is also falling foul. But back to the question, the disruption is going to be very, very significant. I wrote a piece years ago for PCT Annual Report around containers and container ships. In fact, it was about the container box that transformed global trade. If you were a dock worker in Liverpool or in San Francisco, the container ship was a disaster. You lost your job, and the port actually became obsolete. The people of Oakland were perhaps less unhappy because they picked up the traffic, but in the end, global trade explodes. So AI is going to create winners and losers for sure. There are going to be people on the wrong side of it. There's going to be a lot of disruption. I think what we would describe as white collar work, I think, is going to be meaningfully disrupted. But I, again, have done consistently in my career, I tend to think half glass full. I'm an optimist. I think that in the end, AI is a phenomenal democratizer. We're all going to have super intelligence in our pockets. Elon Musk is talking about 2030 for super intelligence. If that's true, even if it isn't, we now have access to information sets that were reserved for kings in history. And I'm a huge believer that it's going to democratize. One last thing, if I may. Again, people tend to always focus on the negatives because the negatives sell newspapers or whatever the digital equivalent of that is today, and because change is scary. But I think back to, say, the 19th century. I've written about this one as well in previous annual reports. Written on the 19th century agricultural mechanisation that really transformed farms. And there was a thing called a McCormick reaper. In fact, it gave way to the phrase, you reap what you sow. And the reason it did that was that harvest time requires getting as many people as you can together, because if you don't get the crop picked, it rots, it wastes. So McCormick's reaper was a small thing you added to a horse, and it transformed the harvest. And that would have been bad for people, farmhands. It would have been great for farmers, but more importantly, 50 years later, it had essentially eradicated peacetime famine. So that's what gets me excited. People are going to focus on the negatives of AI, the disruption, the things that are going to change our daily lives. But in the end, I think it's going to unlock massive positive externalities.
Ben, thank you very much for coming into the studio.
Thank you.
And that's all we've got time for today. You can watch more insider interviews on our YouTube channel, where you can like, comment, and subscribe. See you next time.